how long will it take for the recovery to take hold? Is there a danger that actually the recovery is going to be so patchy that we'll be, we'll see a crisis before a full recovery?
Well, Francine, I think that's certainly a risk, and I think you're spot on. This is going to be an uneven recovery. It's going to proceed at different paces in different segments of the economy. What I would say is we would expect growth to resume in the second half of the year, in Q3 and Q4, and into 2021. That said, we're not going to get back to where we were anytime soon, and I think the part of the market that you'd expect, maybe two parts, the longest healing process. One, I think, are small and mid-sized businesses. They've really been hurt by the shutdown. That will take a long time. And the second is the labor market. Fortunately, we started this crisis with a very strong labor market. Unfortunately, it's going to take a very long time, measured in years, to get back to anywhere close to where we were in February with a 50-year low of a 3.5% unemployment rate.
When you look at some of the market dislocation, where do you see them most? Should we talk about bubbles, or should we quantify them in something else, Russ?
I don't think we're looking at bubbles. That does not mean there aren't pockets of excess. There were pockets of excess before we got here. But let me touch on two areas that are often talked about as bubbles that I think really are not. One of which is people have made the case that equities are a bubble. I don't think that's right. Whenever you look at equity valuations at the trough, they're always going to look expensive because the E in the PE ratio going forward is going to look weak. You have to take a look at other metrics. So if you look at cash flow over the long term and you discount it by where short-term rates are likely to be, the market actually looks very cheap. Now, I'm not making the case that it is necessarily a screaming bargain, but I think in the environment we're in with low rates, stocks do not look nearly as expensive as some have argued. The other place we hear is credit. This is going to be a low for very, very long world. Investors, whether you're a pension fund or an individual, are starved for income. And they're probably going to have to look in places other than where they've looked in the past. We think there's a huge opportunity in credit. You have to be selective. You have to stay up in quality. But people are going to need income. That's another place that's been talked about as a bubble. We don't think that's right.